Yo, what's up? What up, bro? Mr. Simon, Devin, what's up, man? Joe, Elevate Music, what is up? C-Fat, Smack and Bees, Matt, Doge, Nando, Sly, Echo, what is up? Hang tight, how you doing? Brandon, Anomaly, Maddie, Matt, Jose, Trader in the Trees, Ross, gotta love a neighbor, Luke, hey. What is up, guys? Yeah, we're gonna go over the charts. We're gonna chill on this Thursday morning. All right, let's get to it, man. Let's get to it. All right, what are we doing? We are making a projector pattern. This has kind of been the lead here, I guess you could say. It is what is most likely going to happen, and this is just based off of the cycle here. So we had a couple of scenarios. There was actually two. The second scenario would have been that this right here was the projector, and this, see how it's playing out inverse here, would have shot us up, right? So this would look very similar to January, and obviously that's not the case here. So this projector pattern was the bearish scenario, but it is something that is playing out. So it's very likely that we'll the next POI. So we might see something like this, right? Where we start coming back down. We trade along this range for a little bit. Maybe we start coming up, and then we start shooting up towards the end, right, of September. So this is the most likely scenario, in my opinion. I don't think we're going to, unless there's like massive volume coming in today, it's very unlikely that that we'll get some kind of a reversal here in the short term, just because the market is also about to take a breather. This is the POI here scenario for the week on the SPY, okay, and haven't quite finished through, right? It does call for downside towards the end of the week. Now this is just a trend. It doesn't mean that we're going to fall here tomorrow or anything like that. So, but it does call for some kind of a breather in the next couple of days. I mean, this has been an ongoing trend here, and we have already gotten to a point. So this is a level in the market. We were calling for the 436 as a high, and then the range was going to be about the 432. So we're here. And if we don't reverse today, if we don't get a cross on the previous day's resistance, it's likely that this will be the start of a short-term downtrend. Okay, so that is the SPY. Okay, and then another thing that I was looking at here that was pretty interesting is Ethereum Classic. You guys are going to be like, what the fuck? Look at this shit. This is AMC in January. And I've been tracking this little pattern here for a little bit. And I mean, guys, just look at the similarities between these two. This is AMC, okay, in January of last year. It's a projector pattern. Now let's bring Ethereum Classic here. Look at that shit. Yo. I'm just saying, man, if we start getting a run here on Ethereum Classic, now there's two things that can happen here, okay? We do something like this, and we start coming up. Now, I always tell people, when you are tracking, like, certain patterns, the volatility events, these POIs that happen, you can't track them the same way all the way through. Like, all it's doing is indicating upside or downside, so volatility on the zone. And, you know, Ethereum could do something like this, where it comes up and then it starts coming down, right? It doesn't have to go up the same way on these runs, because they're all different, especially when you're tracking a different pattern from a different stock. So, but there's two scenarios here. We either get something like this on Ethereum Classic, or we have a different kind of a projector, and this one is widely known here, but it is a pattern like this. It does come all the way down here, and you make this sort of double top. We see this pattern happen a lot. I can show you an example. There's AMC has, this is the blue pattern, by the way. For those of you that are not familiar with the blue pattern, this is right here, okay? So it does come down, but there would be a stop here since we're making a projector. So it would look a little bit like this, maybe. Something like that. Let's go on the 30-minute here so we can get a better... There we go. Like that. And I think I took a little bit too much. Hold up. Let's do it from here. Okay. So it's the little double top here I'm talking about. I definitely took too much of that pattern. But I'm trying to show you the main part of the blue pattern here is this part right here, where there's always volatility on both sides. These are POIs on the blue pattern. Okay, you kind of get the point here. So we would probably play out something very similar to this and come down, but I see the POI kicking in inverse right here. So it would do something like this, and then it would start to kick off and go. It would be a little bit slower, but this would indicate a short-term correction in the crypto market as well as the stock market. So that is like a kind of like a worst case scenario here for this, and it doesn't look quite bad, but this does go with what is end of September, early October POI, and right now the cycles are tracking very closely together. So this is always another way to interpret that. And then we also have this little January projector here. So both are good in my eye. Like both of them. But yeah, this is what we got, man. Oh, let's see. Let's answer some questions, man. When's the disco party engaged? Well, we got a rally, man. We got a rally for this disco party for sure. But since we are, calling for this downside here after hitting this POI again, it's just a waiting game, man, at this point, and we just wait for the other sectors to kind of go up. That's the goal here. If Amy's taking a breather, you can't just wait. I mean, you gotta look at at the market, see what's going on in the market, and then wait for Amy to go back up again. Because it's I mean, this is the agenda. All right, you get your POI playing out right here, and then you have to wait. Now, for those that remember the volume cycle that I posted here, I made this video before the run. I'm gonna pull it up here. And we're going to update that so we can take a look at it here. The volume cycle. And this is why I'm telling you, dude, this shit is like, this is what validates the entire cycle here. Volume is very important. Now this right here is extended. You can see that there's a massive gap here because what is happening is you're getting that extension in the cycle. So now when you are and this is the same thing, guys, that happened back here in January before we merged, okay, and into this new cycle, because when you reach for higher prices, you're going to create a bigger cycle. Now right here on the projector is when it stopped. You can see this with the cycle here. Okay, it starts on the projector, so the projector is no longer a part of this cycle. The projector is part of the new cycle. You can see right here. So it's the same thing here, guys. We're getting a bigger projector pattern. So this entire section here is going to be larger than the previous one. You can see right here, this one took 9 days. This one took about, well, let's see here. On the stop, this one took about 21 days. Okay, 21 days, and guess what? %. How much was this one? 100% too. I don't know why it's not showing up there. It's supposed to be 100 and on the peak here. So from here to here, and I'm not gonna do the peak because the peak doesn't count. You cannot whenever you're calculating these, I always ignore the wicks because those are thresholds that are crossed very quickly, and there's no it's not like we sustained up there or anything. The average here would have been the $31 range, and that's 100% there. And same thing here. From the bottom to the top, it's about 100%. Okay, so the volume cycle here, validated. And this is one of the things I use here for cycle analysis. Volume is huge when it comes to tracking these points of interest as well. So this one already, we can already tell it played out, and we're just waiting for this macro projector here that will take us to the next cycle, the bigger cycle. And that's exactly why we have to wait, guys, because stocks don't just go up forever. They definitely need to take a breather and set up here again, let that volatility cool down before making that next leg up, right? Yeah, and then we could rally with the family, man. We could definitely rally with the family once it's good. Once we get there. If it's a squeeze, you're right. It doesn't need a breather, but remember, the squeeze is only triggered by too much volume coming in. And when do you get that? We get that on the projector. We've seen this happen before. On the projector pattern is when we get that chance, because when things play out inverse, there's not enough volume happening here. So the worst case here is, and this, I've already told the Discord this too, if things start to come down and we cross new levels of support, it's very likely that this will be dragged out for a really long time at that point, where we would be in like this sort of a drought stage, kind of like what crypto experienced back in what was it, 2018? Yeah, 2018, this entire thing here before coming back up. Now, that would suck, right? But that is exactly what would happen if things did not, if things did not play out to the upside here and there was not enough volume coming in to break this algorithm. That's the only way, guys, that this is going to squeeze, is if there is a too much volume. And I'm pretty I'm excited to see what's going to happen here next week for this ape dividend, because there's a lot of misinformation out there on how things are going to, play out and stuff, and that just sort of needs to happen here. That's going to confirm a lot of things, clarify a lot of things here. I really don't think a lot of people are talking about the option thing. I think that's very important, but I've said my part, and I'm going to, yeah, I'm just gonna wait, man. I've said what I have to say about that. Yeah. Amy's looking really good though. Here, let's look at the monthly chart. See how we're doing on the monthly. Damn, bruh. projector. Yeah, let's do that. Let's fucking do that. Let's take this. Oh no, we don't even have to shrink it. Let's just... Well, we do have to shrink it, but let's... There it is, your projector pattern. Yo, look at that shit. Look at that shit, guys. Right there. There's your projector. I'm telling you, man. On the monthly chart, you have a fucking projector pattern. Why I'm fucking bullish about AMC? Because we have a fucking projector right here. Look at that. Let me just look at it, bro. Fucking shit, man. Look. Projector. From here to here. Now, this is where... Okay, this is what I'm going to do. Watch. When is the POI triggered? Because a lot of people take this the wrong way, and I'm really trying to help out here. The fractal here to track is right here. That's it. You don't want to be tracking this, which is the lingering effect, because that will most of the time is going to play out very similarly to the previous runs. They're going to have a similar time frame on the run because there's a strategic way to pump a stock, and they're all very similar in time. Now, this is why this part is ignored, because it, you know, on the run, it's probably going to take about a week or two for it to fully finish. Okay, depending on if it's a squeeze or not, right? If it's a squeeze, it's probably going to take longer. But if it's, you know, a cycle kind of a run, it's going to be very similar to these previous ones. So this, okay, you don't want to calculate the time on this run. This is probably going to look like that, okay, compared to this entire section here. So let's do this. Let's take this pattern and now extend it on the monthly chart. There we go. We're getting our little... And remember that projector patterns all look different on every time frame. Like some are going to look like, you know, this one looks like more like a triangle, right? Comes up, comes down. Some look like this. You know, others look like this. Some look like this. I mean, but they all do the same thing. They all come down and touch support before climbing back up, right? That's what a projector is. And we're getting that right here with AMC right now. We are getting that right fucking now on the monthly chart. I mean, dude, doesn't get more bullish than that. We've been saying this here, man. Like, projectors is all it takes. We're getting that push up right here, right now, and that continuation. Love it. Yep, there goes the SPY again. Getting it. So, if the SPY does cross previous day resistance right here, then it's very likely that it will reach a new level, a new high level here before coming back down. So it'll probably do something like this. And then chill here, and then it'll start coming down. This is the only other scenario, and this would have to cross resistance. If it doesn't cross resistance, then we're probably going to start coming back down here and reach, before climbing back up again, it's going to be a short-term dip. It'll probably come down here, you know, something like that, before climbing back up again. Doing the do, man. See how Amy's looking intraday. funny because you, like, we're definitely tracking against the SPY, dude. Like, definitely, like, see, like inverse, bro. Look, here's the SPY on the bottom. Oh, here's the. I had to reset that here. See what we got here with the SPY. Yeah, SPY's looking pretty fucking good. It almost seems like it wants to rip here. Like it just wants to keep going. It's pressure. Yeah, look at that. Man. Well, if it crosses, you already know, man. If it crosses this 429 level, probably going to go all the way to 430 and beyond that. 431. Let's take a look at Bitcoin. Here's Bitcoin. Also making a projector. And you can see, man, you can see how things are curling up here. Bro. Where is it? Here we go. Very nice. Very nice. Very nice. Setting up to rip. Yeah. Parabolic arc, man. That'd be insane. I'm curious, though. What would it look like if we had... Because this is also a massive projector. And projectors, typically what they do is... They come up right around there. At some level of resistance here before making that leg up. So it might, you know, do that on the next run. I don't think it'll be that quick. Or I mean that's slow, not quick. I think it'll pop at some point next year. And then the SPY will go above 500. It's a psychological level. Clock over, maybe go to 600, 630. And then, boom, we take a breather. I don't think the market's in crash territory, guys. We've definitely been on the bull side here, or the SPY. And the whole market. Okay, this was just a correction. And then you know what's funny? This is what they do, guys. They'll be like, yo, guys, we're in a recession. Psych. I mean, that's how the media works, dude. They're always going to tell you the opposite of what you want to hear at the wrong time. They'll be like, oh, shit. Yo, we're in a recession. We're in a recession, yo. And then we start fucking pumping. Like, dude, if they say that, just get calls, man. Not financial advice. But that's what I, like, just thinking of, like, bro, This is how the market works. Next year on Bitcoin, by the way, dude, this is Bitcoin, not this is not AMC. This is Bitcoin right here. Damn. A lot of volume coming in here on Bitcoin. All right, Amy getting some love. Yeah, let's update it again. Let's update it again. So this is the projector, the current projector. By the way, guys, before I talk about that, look at the cycle. This is a 62-day cycle. We track here. This is the point of interest. Late July going into August. And then you have your point of interest right here. Man, this one has been tracking like to a T. Very spot on here. And you can see how things line up here. Bigger cycle. But all of these events, I mean, bro. Peak, 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 down. Here, calling for downside consolidation before going back up again. Blue pattern. We'll talk about that when we get... We're actually very close to the blue pattern. Very close. Blue pattern starts, ironically, starts on dividend day. All right, so yes, we are in a projector. And here's our little tracker, right, that we've been tracking here. Let's also talk about this, which I was working on earlier today. Quad witching, very important. Talked about quad witching back here and how things started to curl back up. And you're starting to see that. I mean, that's really all this is. Just get and the quad witching looks really good with a... Let's pull up a moving average. It's not moving average. The fuck? There we go. And let's take away our little guy here. Moving average. Let's change this to 62. There we go. Boom. All right. Quad witching is option expiration dates that happen 4 times a year, right? Quad witching is a very important expiration date for options. And we have seen here on AMC that on this curve that we have seen AMC follow this trend. Okay, so, and this is part of the hedging that is done. The hedging on options. And, you know, this is why I think it's very important to track this, because I think that options drive the price of AMC. I think that's how they manipulate it, since all the money is in options, right? There's a lot of leverage. Stocks that don't have an option chain, they rally a lot quicker, a lot faster. And then once there's an option chain added, the stock slows down, or there's more pressure, it's more diluted. So the option chain is very important. That's why we have not, had our squeeze yet, is because we have an option chain. So you can see that the price is curling up here, and it's following this trend very nicely. So, and this right here, this next quad witching date happens to come before the next POI. So imagine we come up here, we're in this range trading by this quad witching date. They bring it down here to the $23 level, and then September, comes around, or late September, and we start going up here, right? Because now what we're doing is we are higher. We're now higher, and it's confirmed that we are pushing up on this trend. Okay, so think about it this way: like this previous quad witching that we had in June, we did not cross the previous level of resistance on that. This would confirm that, especially if we're up here. This would be the first time in over a year that we crossed that trend. So this would be extremely, extremely bullish. And this is also taking into account the level of resistance that we just crossed, which is this guy right here. Okay, so we're already on good terms here with technicals, and you guys know how I treat technicals here. Very simple. I don't overly use the technical analysis in with patterns and stuff like that, but support resistance, and tying that in with the option chain and this cycle, okay, is very important when these guys are trying to manipulate the price. You know what I mean, bro? All right, let's look at the SPY quick. Yeah, man, SPY's bushing. There's a point of interest on the SPY here midday around 12 o'clock, so we'll see what happens there. But I think we'll experience either a push up or a downtrend push down here within the next hour. I mean, it's that's the thing about AMC, guys. I know there's a lot of FOMO sometimes with fear of missing out, and very similar situation to March. Okay, but when you start to see these, it's part of this whole cycle analysis thing, and things start to trade against one another, and you see other stocks pump and then dump. It's they're treating this the same way. It really is trying to shake off as many people as they can before they can't anymore. And they won't be able to do this once this starts to confirm this bullish trend that we're getting very, very close to. So I think it's just it's a matter of time here. We're getting extremely close. I mean, we just crossed resistance. That's step one. We just played out this, early August POI. And now we're waiting for the creation of this projector pattern, right? So once we hit that level of support here and start bouncing back up, that is going to be that confirmation here. I mean, let's take a look at what GameStop did, right? So many patterns. All right, look at that. That's GameStop before the algorithm just couldn't take it anymore. And what happened? It's slow and steady, man. Slow and steady push up. Okay. How long did this take? Okay, from the bottom here, we're going to say August time here. We start to pick up in volume. So August all the way to end of January. Okay? How long is that? It's 176 days, I'd say, around there. Okay, from a downtrend to an uptrend, and we're not. I mean, really, what we should be considering here is all the way back here, because this is the bottom. This is the bottom of the trend here. So that's 294 days from the bottom for it to build pressure, establish a bullish trend first, because we're in a downtrend here. Now we're picking up and we're establishing a bullish trend. Okay, so it's definitely a different case, because also the structure of the market matters too. And since we were in a short-term bearish market and now we're curling back up, it's like we're here somewhere right now. We're in a phase here, and let's kind of do some math here. Let's go back on AMC. So 294 days. Okay. This would be like a worst case scenario here, is like saying, okay, this is the bottom here. And then this thing extends itself to next year in February, right? But I don't think that's quite the case here, because again, we're dealing with a different situation here. Back before this whole thing happened, people didn't know that this was a possibility, and things are changing. It's like, comparing the Volkswagen squeeze. Like, you can't do that because it's a different situation, right? So now let's go back here and do it from about 170 days. From that August time here, and see how it like peaks around end of October, which, remember, the POI is not the peak. So a lot of people get that confused. The POI is the start. So this would be a POI here, and this is a lingering effect. So if the squeeze were to actually happen here in October, end of September going into October, you would have, like, say we come back down here, we do something like that, and then we start coming up here. POI is right here, and then the lingering effect is the squeeze, right? That's where you get the peak. Same thing back here, okay? I'm counting in what was the peak, but the POI doesn't happen till early January, till you get this first spike. This is the POI right here. It's early January, and then you get that full push through, volume comes in, and then it takes about 2 weeks, sometimes longer, 3 weeks, for it to fully play out. And we can see that with GameStop here, right? So very similar setup, if you count that being the bottom. And now the trend is a little different because, well, this is not really a broadening wedge. We're making something else, but it has a similar idea, right? It's growing. It's definitely growing. And what else is similar here is that we are following an uptrend. Okay, we have not crossed support back down. So this is why I'm saying, like, this is going to be very important to track the trend here, because any cross below this, I mean, GameStop did not do that. You can see that the trend line was always steady, always grew. There was one point here you could see where it was a fake out very quickly. Right here. And then it came back into the channel. But this happened very quickly. We're past this phase. If anything, we'd be like right here, right now. Okay? like right here on this projector. Actually, well, let's go ahead and take this pattern. Let's do it. August, and let's go all the way. We're only going to go to the POI here. We're not going to go above it because it's irrelevant right there. There we go, POI. Okay, and then how long was that? That was about 162 days from the POI, so let's do the math here. 62, 162, bottom, right around there. Ooh. And this is just estimating, guys. Remember, it is different case here for these, but you kind of get the point a little bit. We have our POI in this range, right around here, and then it goes, right? So similar situations, not the same pattern, but you like it's growing. That's what matters. We're respecting this level of support, and it's growing. We don't need to have the same, broadening wedge. Could be a little different. That's fine. It's the volume that matters in the end. So that's kind of what I'm expecting here, man. We're probably, we could say that we're closer to this range right here. And a lot of these you can actually play with a little bit because, remember, the patterns before also, days do matter. So, yeah, let's see. Or I'm sorry, bar patterns matter more than days sometimes because the volume is different. If you're looking back at 2018 versus, 2022, it is going to have very different volumes. So the bar patterns sometimes do a good job here. It's about, this is the 1 hour chart. Let's go on the, what is it, 4 hour? So from the bottom here, it's going to be 440 around there. 440. So it is going to be actually pretty similar here. Yeah, in time. Fairly similar. A little different, but yeah. Right there. Why I think we're going to have a projector. Not the same pattern at all, but you kind of get the point. You get the point. What's my thought on the ape option chain? So I've talked about this on the previous video, and I've had an experience with the option chain being adjusted like that, and I think that they kind of I don't, again, the agenda here is put in place. It's not going to change. We're following a cycle, so the agenda is in place. It's going to happen one way or another. It's the narrative that they're pushing out. Now this ape conversion adjustment in the option chain, what it's going to do is it's going to make the current AMC contracts change from AMC to AMC 1. Okay? So they might look a little different, and it might not say AMC 1. It might have like a some kind of a conversion, a math conversion, and then those will be non-standard contracts. So what happens is with these non-standard contracts is that they're limited to a lot of the times they will be limited to close only because there's very little liquidity in these contracts, because what happens is that there's two option chains that open now. So and typically it depends on the exchange, but most of them will have those standard contracts available the following days. Some of them have them available right away. It just depends on the exchange. So we might have the current contracts will be converted to AMC 1, okay? and then there's going to be a new chain that opens up. It's going to be AMC, and I think this was a little misleading here in the way that they, talked about this, because what they don't tell you is that a lot of the out of the money calls and out of the money puts will have a dry in of liquidity, meaning that there's going to be a lack of demand for these contracts. And we talked about this with Torchlight and support.com, and also it happened with support.com and Torchlight, both of them. When they had their merge or the spinoffs, which again, it's a different situation but the same outcome, because you're adjusting the option chain. So what happened to those contracts, and I experienced this myself, this is why I'm telling you guys my experience with this, is they're very hard to sell, and they lose a lot of value because the new chain that opens up is standard compared to the one that gets adjusted, which is, it's a non-standard option chain. So it's going to have less buyers, guys. Think about it this way: if there's less buyers, less demand for for a contract, and premiums are going to die down because there's no volatility. So just look at it that way. And if you have two option chains to choose from, why would you choose the non-standard versus the current one that will resume once this this whole thing goes through? So I said what I had to say about that. I mean, I said it on Twitter. There's people that kind of understand what's going on here, but I think that anybody who, and this is obviously for those that do options, right? It's not for anybody that does just shares, but those that hold options and stuff, I think it's very important to know the risks involved with that. And this is not, FUD or anything at all. It's just having an understanding of what that's going to do. Now, I did say that it seemed a little bit promising in a way that this would kind of make the shorts want to cover. Why? Because what you have is you have less strain as a short institution if we know that the option chain is being manipulated, and we know that these guys are trying to cover all these synthetics and all these shares that are out there. When you have an option chain that is kind of dried out here, and I talked about how it's kind of like a reset button if you think about it, because if there's not enough people buying that option chain, and there's if these contracts were to, even if they were to go in the money, a lot of those premiums still go down a lot compared to the new option chain. The new option chain is going to have higher volatility, higher premiums, and you're not going to get the same price as compared to the new option chain, if that makes sense. So they're like competing against each other. I know it sounds a little weird, but you kind of have to look at it this way. Go on, if you guys have whatever broker you have, and go look at for example, I'll give you an example here. Go look at Tide right now and BBIG, okay? Now, I'm looking at the current options right now. Go to where it says open interest. Well, no, not open interest, but if you look at the current strike for this week, August 19th, if you look at the 1.5 strike, and note this, guys, the 1.5 strike right now on the regular standard option chain is trading at 18 cents, okay? 18 cents is the ask, 15 cents is the bid, okay? If you go on the Tide, right now somebody's asking for 40 cents, but there's no bidders. There's 0 bidders. There's very little volume. Also, the volume for the 1.5 strike is only 23 for the day versus the standard options, which are 17,000. So you can do the math here, guys. There is no volume coming in on these guys versus the ones that do have that standard option. So this is why I'm saying it's very important to know that. People need to understand that. I had an experience with support.com, and I kind of learned the hard way because I did have contracts, and This is not something that they push out. It's go look up non-standard options on Google, and it'll tell you why there's a lack of demand for these, why the people stay away from these. It's non-standard options will still take a hit even if they're in the money because of the lack of demand. But people that do have options for, that are in the money, they have an easier time exercising them, and versus the ones that are out of the money. Out of the money, you can't exercise, and sometimes, depending on the exchange, they will not allow you to sell those. That is not always the case, but a lot of exchanges will not allow you to sell out of the money options, okay, for that are considered non-standard. Yeah, and like I said, I've already talked to everybody about this on Twitter, and there was a lot of people that understood this whole thing. But come, guys, I'm calling it right now. Come dividend day, somebody's gonna be pissed because they have contracts for for next year, and they're non-standard, and they're out of the money. They're like, think about it this way: like, we got AMC contracts right now. Look at the 145s for January of next year, which have been there forever. 145 has right now 100,000 in open interest. Okay? Once the new option chain opens up, these will be converted to that AMC one, and there's going to be a new chain that is just standard for the 20th of January. Okay? That new chain is going to have 0 open interest. It's going to have 0 volume when the dividend takes place. And that is what people are going to buy again. They're not going to buy the non-standard options. They're going to buy the current ones. So, nobody is saying this. Nobody is telling you this, because I think, in a way, maybe it might come across as FUD or something like that, but it isn't. I mean, it's not supposed to be. It's supposed to be transparent, and I feel like people are not getting that. Like, just, bro, get some transparency up in this. This is why I'm telling you guys, because I do, I've had experiences with this, and it sucks. So I just feel like, again, this does not change the agenda. The agenda is in place, and it's going to keep happening the same way on these points of interest that we're tracking. But I do believe that everything that gets pushed out, guys, catalysts, things that we're waiting for, fundamentals, stuff like that, it's all part of something that's already written, okay? This agenda, it's all part of it, and it's all noise. So I'm just spreading my experience. The only way this would not happen, I'm going to give you the best case scenario, is that if, for whatever reason, there is they just cancel the dividend, or they change the dividend. They can do that if they want to. Or if there happens to be an inflow in demand because, say, these institutions are using those contracts for either for leverage, or because they I don't know, they prefer to use these contracts, which would just be weird. But maybe synthetics will be shown in that way. But that's more of like a stretch, in my opinion. Just the way I've seen this happen before with all these other stocks, I feel like that's a stretch. So just giving you guys the worst and the best case scenario here, but it's very likely that we're going to see that, take place. And all right, let's go ahead and look at the market here, see what we're doing. We're just right over here. Okay, things are starting to set up here. All right. All right. Also, if you guys want to join the Discord, here's the website. You can click on the website, and it'll go on the more info section, learn more, and then you can go to the social pages and press the Discord. I also have an actual Discord premium too, where I send updates on cycle points of interest. You have the interactive charts, and I also do option alerts here for, based on the points of interest that we track. We've been doing pretty good. Pretty fucking good, man. It's been fun. It's been real fun. Right now, I do have a limit set because I want to stay comfortable and try out just 150 for the time being, and then later, if things start to, if I like the way things are flowing, if everything's good with that volume, then I will be adding more to that section. But right now, we are going to have just 150 and just try it out for a little while. Things are great. People in the chat are awesome. So we'll see how it goes, and I will update everybody else when that time comes. All right, let's see. AMC, let's go intraday, see how we're doing. Yeah, we got the little arc pattern here. Maybe something like that. Probably not as high, but it will probably turn into some kind of some kind of a pennant and then break down. Just because, guys, we are calling for, I'm telling you, we are calling for this projector, and it's very likely that if it does continue to track this way, that we are going to see that $19 level, okay? The only way this would not happen is if we started to get a surge in volume and we reverse to previous levels of resistance, so making this massive V reversal here like that. So that would be the only way that I see things going back up here. And if we do not get that here in the next couple of days, that it's very likely we're going to come down to 19 and stick around this range here for a little bit, making that projector and then going back up again, right? So, all right, guys, I'm going to keep this, keep you guys updated here. Make sure you guys do follow on Twitter if you want a lot of updates, as well as join the Discord if you want updates on that. Okay, and we're going to take a little break here, man. I'm going to update some charts. I will go ahead and see you guys soon. Fucking love you, man. Bye-bye.